That is hilarious.
Okay, are we ready? Let's call the April 27th finance meeting to order. Let it be noted that all committee members are here. We have several guests from Raymond James, and if you guys could introduce yourselves, please.
I'm Rick Delaney with Raymond James in Nashville.
I'm Melissa Zelke with Raymond James as well here in Nashville.
Okay, and then we have the mayor here and our new city operations officer here, and several other aldermen and department heads. So let's get started. First order of business is the acceptance of the agenda, and really the only thing that we have on the agenda is a short presentation from Raymond James about the refinancing and also the reports, the financial reports from our finance department. Do I hear a motion to accept the agenda?
I so move.
Second.
All in favor? Alderman Dixon,
Yes.
Alderman Collins,
Yes.
and I'm a yes. So we have an agenda, ladies. The next order of business is to accept, and I don't know if you want to do it together or separately, the acceptance of the March 23rd Finance Committee meetings and also review of the April 13th, 2021 Special Finance Committee meeting minutes. Do I hear a motion?
I so move.
Okay. Do I hear a second?
Second.
Okay. Any additions, deletions, comments? Okay, let's vote. Alderman Dixon
Yes.
and Alderman Collins,
Yes.
and I am a yes. Okay. The next order of business is the discussion of the refinancing, including Raymond James. Robert, do you want to lead this one with our guests? And then I guess we can ask questions if we need to.
Sure, I can kind of start us off a little bit. We talked about this, if you'll recall, at 2 weeks ago at our special called finance committee on the 13th, and put forth the resolution to by the board to be considered tonight on BOMA. And during that, there's some information that has to be provided to the board as an attachment to that at minimum. And we've gone over a couple of those things already, but wanted to give you guys an opportunity to be sure and ask any of those questions that maybe I wasn't able to answer, or potentially some others that maybe you've thought of since, because I know it's certainly a little bit of information overload. And with that, I'm happy to share my screen. I can turn it over to Rick and Elizabeth now. And if there's anything you guys want put up on the screen, just let me know. I'll be sure to do that. Or if you have something of your own, maybe we can work on letting you share yours.
Okay, who wants to go first?
Well, I'll start off. That's okay.
Okay, and I wanted to welcome you both too. I don't remember if I did that or not.
No, we know we're welcome. Thank you. As Robert said, we have a refinancing of 3 capital outlay notes on the agenda tonight. In order to start a refunding transaction under Tennessee law, a refunding report needed to be filed with the Comptroller's Office, the Director of Local Finance, and reported on to you directly, Board of Mayor and Alderman, and of course the committees. That was done, and the report was received, and you should have that, which is a companion piece to the resolution that Asbury and Sims prepared authorizing the transaction. The Controller's report outlines basically the transaction expenses and the expected results. At the time, the results were anticipated back in April, back in late March, I guess. The savings projection was a little under $300,000 on an aggregate basis, or about $341,000 on a present value basis. Those savings were all are considered after all transaction expenses. So what you see is what the expectations were as far as the plan was concerned. Since then, we've refreshed the numbers. And Elizabeth, if you'd like to take it from there and just talk a little bit about where we think we are now. and where we think we're going.
Surely. So I've run several updates since the original report. But I ran an update recently last week to adjust for market movement. And we're looking at roughly 5% PV savings or $400,000 PV. Net would be more like $413,000. I will say I think this is a bit conservative, but we do like to quote slightly conservative numbers heading into pricing, especially in the market we're in. And so we are, as they say, cautiously optimistic about next Monday and what will unfold.
The all-in cost of funds is an important number because the question would be, what's the rate going to be? The all-in cost of funds is defined basically as all the transaction costs plus the cost on the transaction to get it done. Right now, our projections are based upon a 1.03 rate. That's a lot better, I think, than what you received for your 12-year capital outlay note earlier in the year, which was a 165 plus the transaction expenses. So including transaction expenses, about a 1.03, which is really tremendous and representative of some exceptional rates that are in today's capital markets. The other thing that's been sort of going on in the background here is with respect to the credit rating, which is part of the transaction. We've reached out to Standard & Poor's, and as maybe you all recall, the city currently enjoys a credit rating of AA+, which is outstanding. It's one level below the AAA rating, which is the best you can possibly get. That is a credit rating that's consistent with your neighbors, the county, Sumner County, and also with Gallatin and to the north of your White House. A little bit better than some of your other neighbors. So that's really tremendous. We think because of the length of the transaction, which is very short, again, matching up the years, the budget years of your existing capital outlay notes without extending them, that in fact, what you're going to have is a very, very nice presentation to the capital markets, hopefully next Monday, the 3rd. And some really great rates based upon what we've been seeing recently in the capital markets. With that, I'll stop and let you ask questions to the extent you want to of either of us.
Well, I'd like to make a comment and just verify the terms of all of the debt have not been extended. Is that correct?
That's correct.
So the terms stay the same. So we haven't extended it out to any length other than what it was originally.
Right. Match it in a fiscal year. That's exactly right.
And we're looking at projected savings of between 400,000 and 413,000 conservatively based on a 1.03% rate.
That's correct. Or yes, an all-in cost of funds of 1.
Yeah, that includes all the net effect after all closing costs and everything else is paid.
That's right. That's right.
Attorney's fees, your fee.
Yeah. Yes. That's right. Standard & Poor's, everybody.
I just wanted to re-emphasize that. Alderman Dixon, did you have something that you wanted to ask?
No, Rachel.
Can you hear me?
Yes.
Okay.
Alderman Collins?
I was wondering how this transaction, how you think it will impact our bond rating after this transaction is completed.
That's a good question. We think, and again, we've had discussions with Robert and Kimberly with representatives of Standard & Poor's. Generally speaking, when you are doing a refinancing like this, without extending debt, what you're doing is improving the transaction and strengthen the overall financial position of the issuer, in this case, the city. And that is exactly the purpose of the transaction. But for the fact you're saving money, you wouldn't do it. So the strength of your overall finances are being enhanced, and we think that's a plus for the credit rating that you currently enjoy.
but it isn't likely to get us to a AAA.
Well, we continue to work on that. I think Robert and Kimberly and Elizabeth and I have all talked a little bit about that. Lots of things that the rating agencies like, some things you can't control. But we're fortunate, those of us live in Middle Tennessee, to enjoy a robust economy, which we can't really control. We know that property values have gone up dramatically, not only in the greater metro area, but also in Sumner County and in Hendersonville. So those are things that we can't really control, but we enjoy, and that's a great strength. The things that you can control are your fund balances, for instance, which you're working, I know, on a fund balance policy that'll go into effect in July. The other things would be formalizing your policies, your operating policies, like on fund balance, like on investments, internal controls, I guess, what you already have in place, your debt management plan, policy, those kinds of things. Those things were liked and very much by Standard & Poor's in particular, because they institutionalized the overall management of good, solid credits. There's more, but those are the high points.
Great.
Good, thank you.
Anybody else? Our new CO, well, I don't know. Oh, yeah. And I don't know how to pronounce your last name, Jesse. Eckenroth?
That's right. You got it.
Okay. Do you have anything, or the mayor or any of the aldermen?
I don't know, ma'am.
Okay. Paul?
No, I have no further comments. I think we're right on track, and it's well done as far as the organizational process. It went into place, and I think we're on track to make a good move.
Mm-hmm. Thank you. Mayor? Okay. All right. Well, with that said, thank you, Elizabeth. Thank you. What is your first name again?
Rick.
Rick. Thank you. I
Richard,
thought it was
if you
Rick, but I
remember.
wasn't absolutely sure. Okay. Thank you for coming tonight and being able to talk to our entire board. And most of all, we appreciate saving $413,000 for our taxpayers. Good deal.
We'll keep our fingers crossed. Thank you. It's an honor to work with you, and we look forward to next week.
We have a very fine finance department, and we have a very fine leader of our finance department. So I know they worked very hard on this, and we're able to get to this point. So we're going to be able to see the savings starting very, very soon here. Thank you.
Thank you.
Okay, next is the finance reports, sales tax reports, and unless the committee has something else that they want to ask. Raymond James, okay. Robert, I'll turn it over to you with our reports.
All righty. But well, first I'd like to say thanks to Rick and Elizabeth being available tonight for both finance and BOMA. They've been excellent to work with and have kept me on task for sure. Regarding the local sales tax that we report each month, we received this in the last couple of days. We've up year over year, March to March, of around almost $90,000, which is very good news. Sort of right at what we'd anticipated for this year. And as you can see, that's a 14% increase over last year through this year to date. That's around 1.4 million, as you can see here, if you can see my mouse highlighting. But that's estimating here surprisingly around a 24%. I would be surprised if we stay on par for that, but 24% increase. This large number, as you can tell, is skewed a little bit, as we say each month, based on a 9% original estimation of potential loss in revenue due to COVID. So that growth is skewed a little bit, but it's also it's still pretty staggering, and wonderful numbers to report here.
Yes.
That being said, we're going to breach probably the 15 million mark for the year, I estimate. And that's pretty, that's a number we've not reached before. And that's a pretty good milestone. We're growing again, year over year, somewhere around 4 to 5%. So to see somewhere over 20% would be, again, great numbers. Everything's trending positively here. If anyone has any questions before I move on, please, as always, more than welcome to interrupt me, and I will go right back.
Robert, so I have a question. So we're going to see an excess of 4.3 at the end of the year as a projection,
Above that,
the budget?
if we continued this trend, it's potential, yes.
So tell me where that leaves our, where that approximately will leave our general fund. Do you have any projection for that yet?
For the unassigned fund balance,
Yes.
I still believe we're going to be somewhere in the $5.2 million range, depending upon appropriations and things like that over the next couple of months. That can obviously lower that number or increase it depending upon a few things. But most of my estimation there is based with some trend in mind of potential last couple of months appropriating funds and encumbering those items. I know for myself personally, I hold off on quite a few expenditures until we get the bill from the county that we get every year, because I never quite know whether that's going to be right at it or under or above, and I've got to save a little money just in case we go over on that. It's not
Sure.
something. So anyways, that being said, I've taken the liberty of a few estimations in that number. I still think we'll be somewhere around 5.2 million. Okay, I'm going to move on. Just as an FYI, Arlene, you are muted, so I saw your lips moving, but I think you were saying okay. Yeah, thumbs up. So hotel motel, we're finally in the positive. We over last year. Now March was impacted slightly. I would say the last 2 weeks mainly of hotel motel and some of the craze of COVID last year, but we are positive year over year, up around almost $1,000 over what we had last year. So that's good news. We're heading in that direction. I see a hand up for Miss Dixon there.
I don't mean to interrupt you. I just have a question for Arlene at when you're done.
No, go right ahead. That was we're averaging around 15,000 a month, but that has gone up. If you'll remember, sometime around 3 months ago, that was lower to around 13.5. So that's about the only other note I wanted to mention.
Great. So Arlene, the hotel motel tax, we can only use that money for tourism, right? This money.
Yeah, for something or for activities that benefit tourism.
Activities that benefit tourism.
Tourism development is a very broad term, but that is what the code says.
So could we use it to pave like a parking lot or something of that nature?
It's kind of I'm sorry, I didn't mean to speak for you, Arlene.
No, go ahead, Robert, because I mean, that's kind of a good question.
It's a situation where it's kind of the way the ordinance reads is that the board shall appropriate and designate funds each year in the annual budget process. And so I think if that's something the board potentially wanted to do, it's worth considering. Me personally, I think paving a parking lot, park or not, is a little tougher because I don't know if anybody's coming. You certainly might avoid a park that didn't have parking, but I don't know if anybody's coming here for the parking. I could be wrong about that. It's something that I could be convinced with an argument. I don't know if it's right, wrong yet.
Okay, I just thought I'd
haven't had it
out there in the universe.
Yeah, not to say no by any means. The question has not been posed before, and I'd be certainly willing to have that discussion.
Good question.
Yeah, very much so. Parks is definitely a reason. One of the would fall under tourism development. So it's certainly worth exploring. Moving on to our cash flow analysis for the month of March. We are up a little bit over last year. I'll say that coming out of the gate, which can sometimes be, initially we were worried that our collection rate for property tax may go up a little bit through fears of, go down a little bit, sorry, through fears of COVID-19. However, that has not trailed off very much, though we did see our March collections go up. As everyone may know, property tax being due in February, we receive a huge spike in revenue. But March, generally, we get some latecomers who come in and pay. We've seen that go up, but significant enough, obviously, to see a jolt, but nothing to be worried about from a collection rate standpoint. That being said, we are beginning this trend that we always begin in the last 3 months of the year, where our expenditures sort of even out and we trickle down our fund balance through the end of the year. This is where my numbers come from, on the green line being obviously our cash balance versus red and blue, red being revenue and blue, excuse me, I lied. Red being our expenditures, blue being our revenue. And what we'll tend to see is we'll see that trickle down over the end of the year. And one of our cash flows here, 5.1 million, that's kind of a little high maybe, but we do tend to see in June expenditures go up just due to that encumbrance. We issue POs, everyone sees kind of what they have left at the end of the year, and a mad dash, though we do have a cutoff on it too. So finance is all over it. That was general fund, excuse me. I will reiterate that this one is State Street aid. This is our gasoline tax. And this one sort of mirrors in an opposite direction. We spend less in the middle part of the year, or middle part of the fiscal year, but we collect all year long pretty regularly. So we'll see that balance trickle down all the way into the winter, and then winter will up our cash balance again. That's why this line sort of does a V shape here a little bit. And to move on, if anyone has any questions, happy to move back to it, but just didn't want to skip over too quickly. And the last fund that we typically talk about, stormwater, we have collected all, I think we'll have a little bit between now and the end of the year with property tax coming in, but we've collected the majority of what we will collect, which is estimated 2.3 million with a few varying collections coming in later. We do expect to see a few more, but there's some outstanding here where we estimated 2.5. And the majority of these, as you know, have come in the form of either drainage projects, some engineering services, or which I did receive news today that I'll tell you about, but we have purchased land in some of our flood zones through the FEMA grant, which I received word today that we have gotten the revenue for. So that is good news, and things are being turned in and getting money back for this. So that's like I said, really good news for us, because tracking down revenue well after the fact tends to get kind of cumbersome there. But
Robert, was that a 80-20 split with FEMA?
I will verify. We just got it in today, and I haven't seen the full figures yet. But
Oh, Marshall would know.
25.
What is it?
This is 75-25.
Okay, all right. Thank you, Marshall.
And with that, I think that's the shortest agenda we've had. There wasn't a special committee. But
Yeah, and I just wanted to let the committee know, and hopefully the committee agrees that Mr. Eckenroth, I will get that name straight, has requested that our finance team be in conversation with him in reference to our fund balance policy, and has asked us to defer that for several weeks. So if the committee, and I know you both are sponsors with me on that resolution, so if the committee doesn't mind, on the advice of our finance director and Mr. Eckenroth, for him to review that with Robert, to make maybe some tweaks in that, I'm going to, if it's okay with you guys, because you're both sponsors with me, to pull that from our agenda tonight at BOMA.
Do we need to have that in place by the end of the fiscal year, right?
Robert, I asked the same question.
It's not a requirement. It was a heavily suggested, but I think showing good faith effort that we are working on creating one will suffice. Initially, my request was to attempt to turn one in with this year's budget. By this year, excuse me, FY22's budget was my goal, but certainly things, conditions change that can allow us to rethink that.
Mr. Eckenroth, do you want to comment on that?
Sure, I think it would be our intent to still hit that deadline for this year. If we don't have everything worked out, we can still approve a policy and amend later.
Right.
We just see there may be some opportunities within that policy, and if we can do it all at one time, I think it would be a little more efficient. So that was our goal.
Okay, are we planning to have that on our next finance agenda next month then, so we can review all that? Is that our intent?
Yeah, I would think that we would have within a month, we would have something to you. Absolutely.
Okay. All right, committee, do you have any objection?
No.
To that? Okay.
Absolutely
Well,
not.
I'm going to make that motion at our agenda at BOMA tonight.
Okay.
And if there's no other further business, committee, do you have anything else that you want to discuss, Robert? Anybody else? Okay, do I hear a motion to adjourn?
So moved.
I second.
Okay, motion to adjourn has been seconded. Alderman Dixon,
Yes.
Alderman Collins,
Yes.
and I am a yes, and our meeting is adjourned. Thank you.
Thank you.
Bye.